Good afternoon, everyone. It is BC Ridgefield here, coming to you live from London. It's just gone 1 minute past 1 p.m. here, making it just gone midday UTC, with you a little bit later, an hour later than normal this week, to allow for some of our awesome team to get some other content out there. So big shout out, as always, to everybody that's watching this live today, as well as everybody that's watching this on recording. Now, Monday is typically either our education focus or we're mainly kind of focused on Bitcoin. I know we've got some very, very kind of strange or pretty much confusing market conditions at the moment. I think people have been through some really, really nice spells recently, seen a lot of people winning. The trading team have been doing exceptionally well from our end, as well as others out there as well in the community. And outside of that as well, our friends, other people, connections we've made across not just crypto Twitter, but the entire space. Now, I think at the moment you can kind of sense this sentiment in the market, people feeling a little bit like they're on the wrong side of this at the moment. So I just wanted to kind of strip away all the noise and just really kind of get back to the basics. What are we looking at? What should we be doing? What do these conditions present themselves with? There's nothing wrong about being bearish. It's all about context, right? It's about whether that's an intraday basis, whether that's a positional basis, whether that's long-term, short-term, all of these factors. So I wanted to start with just a nice clean chart, all right, so that we can just really strip everything back to the basics. Touche, hello, my friend, and Erica as well. Welcome, guys. And look, I'm looking at this in a few different ways, right? So I'm always looking at structure. Yeah, so where are the key levels in the market? Where's the support? Where's the resistance? Where were there buyers before? Where are there sellers before? All right. And then we're just piecing together the laws of probability there to select these key areas and watch to see if we get a reaction. Now, if we zoom in, for me, by the way, just one thing that I will add to here is the all-time high back here in November 21, I think still has a really key role to play here. Price has really failed a couple of times now to gain acceptance across there. We've left these kind of sloped highs up here, good liquidity pool for price to attack at some point. However, we can see that, we had the deviation, price got underneath, saw this rejection here as well, a very, very clean rejection of this level here. Now we've sold off again. Now, in terms of what's supporting the market here on a weekly basis, then I've got a keen interest on this fair value gap, right? Now, there's a couple of different things to say here. Okay, Nit, hello, my friend, and Uluwazi Milogo, how are we doing? Couple of different things to say here. First of all, this is an inefficiency. It's a gap in the market. Okay, it's caused by, order pairing or a lack thereof. Price shoots up because the buyers really kind of overwhelm the sellers. So you're constantly buying, you're buying in, and as you buy, you get that slippage higher and higher. It's the same principle as to why we see these rejections at key levels, right? Because it's about large orders or collections of larger orders being sold back to the market at key liquidity points. That means that up here, you've got key liquidity pools in terms of buying. Yeah, so you've got a lot of buying up here. Anyone that was short, your stop loss get triggered up here. It turns into a market buy order. What it does is it gives you a nice target area if you want to sell back to the market for minimum slippage. And, not so applicable to many of us or possibly any of us here in this stage, but to your banks, your hedge funds, countries that are, controlling these things, it's really, really big when you're dealing in the tens, hundreds of millions, right? So with that in mind, why is this area still significant? Well, for me, this is still capping the downside, right? Price came into here, found buyers, into here, found buyers. What's worth pointing out is that each time we've kind of dipped into this, we got found the buyers here, right? Then we kind of dipped into this here and we found the buyers here. Right, we can see these kind of bounces setting these lower highs. All right, so we need to be aware that these things seem to be getting a little bit weaker. Now, that's not a problem because we often find these kind of points of exhaustion before really settling. But on a weekly scale, I've got two kind of key areas that I'm looking at here. And it's quite simply this weekly high. All right, which is at 65,000 flat here on Binance. That is a perfect round number. And for anybody that's regular on the stream, my feeling on these, it's a very common feeling as well. this self-fulfilling prophecy type thing, the fact that these areas are targeted, right? These round numbers do really make a lot of sense. And then look again, as we go down here and we've got 49,000 flat, okay? So upside, downside targets. What's quite tricky here is that, you know, if we look at the candles, we had this kind of doji candle, which was still probably more bullish than it was bearish, right? We said it at the time because we'd come along, we'd taken out liquidity below this low, we'd rebalanced the final remaining element of this gap. So with this now being, and I get this question quite a few times actually, so it's a good chance to just address it. People say to me, okay, so this is kind of support, is it? It's more of an area that we look to for rebalancing. That means when price comes into it, if we see the buying pressure, then we retain that bullish bias. We did again here, we did again here. Now, the issue, or not the issue, but the confirmation that I would want to get bearish on a weekly scale is for price to close below this. If price closes below this, we invert this, that becomes a gap inversion, meaning we close below, the likelihood increases exponentially that we then reach for the next liquidity pool, which in this case is the really clear long-wicked swing low. So that's where I'd be looking for if we got this scenario. Does it mean that I would not consider shorting until then? No, not at all, but it's all about time frame context. So a couple of other things here. So this is the downside target here at 49k. This is the upside target here at 65. At the moment, we're kind of a little bit in no man's land between these. One of the really interesting things that we're looking at in terms of the candles is this. There's two things. One is the inside bar pattern that's currently playing out, which we're going to look at in a moment. But the other is that also, you know, we've now set this order block here. Okay, price has changed the state of delivery. We set a bullish order block, this huge engulfing candle. You know, the end of last week had me feeling really bullish for sure. You know, that changed very, very quickly on Monday last week when we got the big sell-off. We then had an absolute, you know, a hugely bearish day on Tuesday as well that kind of flooded off. We'll take a look at that in a moment. All this information for any of you that are interested can be found in the weekly Bitcoin report. I do mine on a Sunday evening for the family over at the Bird Nest and all the members. So that information is available. You can go back and cross-check that. You know, and like I always say, you always want to do your own research and analysis, but it can often be kind of quite good, especially if you're taking these things from people that are doing this professionally and full time, right? So this definitely kind of, you know, re-engages our bearish bias here on a weekly basis. Price can draw up into this. You could draw all the way up to the 50% and still see a really, really heavy sell-off. I mean, you could draw all the way to the top of it and still see a heavy sell-off. But what I'm asking myself here is, okay, what other means do I have in terms of looking at this? So I'm going to get rid of this and we're going to get rid of that. And we've got our upside target and our downside. What I really want to focus on here is this. I'm just going to draw this in here because this is our inside bar, right? You can find an instructional thread on this at the top of my profile. On Twitter or X, which is BC_Richfield. And it teaches you about how we play this pattern, all right? So what am I looking for here? Mother bar low, right? So when you see this, we have a large candle here, yeah? And then the second candle closes within its range, meaning it doesn't go beyond its high or its low. This becomes an inside bar pattern, right? Now, the first candle becomes the mother bar, and the second candle becomes our inside bar, okay? And we just simply treat these as two ranges. So whenever you deviate a range high, meaning that you go above it and come back within, we then target the opposite side of the range. However, we do that via a range midline or EQ, equilibrium. All right, which I'm just going to turn this red so that it stands in with the rest of it. And we can see the equilibrium of this lines up with the inside bar as well. Just going to get rid of this for a moment and this, just so that we keep this nice and clear. So now we're going to drop down to a daily, right? And just to give you a very quick example of this as well, right? Just focusing here on the mother bar, because we had another inside bar pattern here, right? This one was back in July, actually the 1st of July. Right, so let's take a look at this. there's an argument that this inside bar is still in play here, because what happened? We set the inside bar pattern, the mother bar higher got swept, price came back inside the range, and what did it do? Found resistance here around the midline, then price sold off to the lows. It then closed back inside. Where did it then head for? It headed for the previous mother bar higher, right? So we can see this stacked resistance up here, which is still in play. Now, as we move down to the daily, there's other areas that can give us indications here based on liquidity, right? And also levels. I mean, we're mapping these levels out for the purpose of seeing how price engages with them when it gets there. Yeah, what we don't want to do is get in the habit where we're taking trades in the middle of nowhere. We want to take trades where we've seen engagement before, where we've seen price interact. Now, this one here with the mother bar high, when we got the weekly close above it, which that would have been set there. So that should have been a Monday. That was the 1st. Then we had the 7th here. So that was when the mother bar candle closed. This is when the inside bar candle closed. So actually, when we closed above it here, look how we got this lovely retest. Price sold up to our next key liquidity level. However, when we got back inside the range here, that's when we were looking to get this sell-off back down to the range low. You can see by this low wick here as well, right? Price recovered this and then ultimately came up to our target up here. I'm going to move this back for a moment. Yeah, or actually delete this now because you can see the interaction that we've got. So now we're looking at this. For me, it just makes a lot of sense here that if we're looking at this in the principles of liquidity, we can see what happened. Price moved up here. We got two things that were really good confluence for this here on the daily. One, when we came in here, and yes, we would have had to wait for Tuesday's sell-off. However, we did see continuation of downside then. So the first one is when we had this bullish gap here. So if this breakout was to be confirmed, we should have found buyers in this gap. When we closed back inside the range here and then violated this gap, like I discussed regarding the weekly, we inverted this. Below here, we then expect bearish continuation. Where to? Well, to the next resting liquidity. Yes, we've got this low here, all right, which we came into. But ultimately, this low down here is the key target. Now, the other thing that gave us a lot of confidence here is when price closed this candle here on Wednesday, we created this bearish gap here. And remember how we're kind of looking at gaps in terms of how is price reacting when we're in here. If we're showing a lot of strength through these and we ultimately close above them, like we did this one bearishly, you know, the buyers obviously aren't there, meaning that they're going to need to step in lower down. So we target the swing lows, we target the other inefficiencies. In this case, there's no other inefficiencies, but we did have a beautiful swing low here, an internal one, and then an external one here. So now price is down here. I still think that the most likely destination for price is here because it's our inside bar low, and it also represents the range EQ from the mother bar. We can see we've got a lot of clear space down here that price could go down into. So what do we look for in terms of playing this? Well, quite simply, if that theory is incorrect, then I would need to see price close a daily scale above here. So daily close above 59,359 to create this as a bullish order block, 3 consecutive bearish candles, in which case then I would expect price to move up towards here, all right, which is the next resting liquidity, which is a high within a gap. So we know that these are really good liquidity pools. That's at 61,166, or call it 167 because it's 166.99. So how do we know which one it's going to do? Well, we never do. That's the truth. We have to play the probabilities here. So that's why I'm putting this set of parameters in place. On a daily scale, I want to see price close above here if I'm considering anything more bullish, all right? If not, I'm simply looking for price to draw back as we've started the week here. And then the lower time frames, find some key areas that we can adjust to see price come down into this region here. So now if we move on to our 4 hour, for example, what does that look like? Well, actually, we've seen the very early stages of a slender bullish recovery here. Remembering just on the 4 hour, we had a very, very skinny bearish gap, initially saw this rejection, but then this morning, we've had that nice close above. Bruno MC, F84, hello, mate. We'll absolutely take a look. So Bruno and I were just chatting in the Burb Nest Discord about a couple of positions. He was asking some really, really good questions. A lot of people kind of saying, you know, I've got these positions open at the moment. I was really heavily in profit in them. I didn't take profit on them because I've been holding them. And, you know, some of those positions now are a little bit underwater. So just looking at that. So what we're looking at here, Firebase from getting liquidated, of course, if the market keeps tanking, I better exit. Yeah, okay. So the idea around this, and I think this is going to be applicable to everyone today, which we're going to cover, is at what point do we need to be looking to exit these positions, right? Yeah, thanks, mate. But we are going to dive into that in a moment because I think it's something that's quite applicable for everyone. So I think we can look at like AVAX, you know, PYTH, even take a look at MDT. And what I will explain is, look, there's a lot of different factors that move these markets. Economically, people maybe that do know this show a bit know that I'm very much a traditional market trader, you know, indices, Forex as well. So when we're looking at those markets, there's such hugely news-driven markets. You know, we're in an election year, we need to look, and we need to also understand our cycles, right? You know, our historical cycles that we can look into. And what I'm going to do is I'm going to dig out a brilliant piece of information that we were discussing with Crypto Burb and some of our crew over at the Burb Nest with seasonality cycles, right? So it's really, really important to remember that, you know, these things are studied, these things give us repetition over time. And the reason for that is because they're often aligned with traditional markets as well, right? And what that means is that when we're looking at this, and let me just share this across with you guys quickly before we finish up. Oh, no, actually, let me finish up first and then we'll share it across. But I've got the piece of information, right? So when we're adding in things like seasonality cycles, when we're looking at, you know, times of year, when we're looking at, you could be studying everything from volatility to open interest, right? What we're doing is we're building this picture of confluence around our plan. And then, you know, fundamentals obviously go into that as well. Some people use on-chain analysis. And then, well, certainly what I do anyway, the key thing for me is then looking for the technical setups that we can align with these to give ourselves the best possible outcome. All right. So let me just take a sip of tea. And let's dive in. So we're going to finish up on Bitcoin. I'm going to cover the seasonality and looking at Bitcoin monthly returns, which we're going to look at as a percentage over time since kind of back in 2013. Then we look at the average, the median, and look at why these months can typically be prosperous or where we need to be cautious. And then we're going to overlay the technicals on it by looking at the coins that Bruno has suggested here. So with this one, the first stage of the bullish recovery that we've seen is this. We had this bearish gap here, right? So let's just look very, very quickly at what happened through the last gaps, right? So this is what I'm talking to you about right here. This was a bullish gap. Price had drawn up to our high time frame target, which is this gap. Remember what we expect in gaps. We expect price to, you know, accept value here and move higher, ultimately closing outside of the high time frame gap on that aligned time frame. So if it's a daily gap, you want a daily close. If it's a weekly gap, you want a weekly close, 4 hour close, etc. However, we expected rejection here. Why do we expect rejection here? Well, when we overlay the current time frame, we can also see we had another bearish gap here. So we've stacked this high time frame bearish kind of points of interest or areas that we expect a reaction. And then what we do, and I'm just going to delete this for a second so it's clearer, we set this bullish gap. When we close below this here, we then know, or we don't know, but we can be fairly confident that this inversion turns into resistance and that price is seeking liquidity. Remember what we said before, below the next low. All right, obviously it would be the next high if this was a bearish example, turning to bullish. It's not, it's bullish turning bearish. So we see we get the rejection here. Now, the reason I wanted to emphasize that again is I understand that a lot of people might not be familiar with these concepts, but when you look at these, get your eye attuned to looking for these gaps and how price engages and reacts with them, because price is typically looking for liquidity resting above an old high or an old low, or it's looking to rebalance one of these gaps. And they can give us a lot of information. Now we're in this gap here. We see we've got the inversion, resistance, bearish gap, resistance. What do? Tag into that, price sells off to the next liquidity lower. So what happens when we do this again? Okay, well, like we said, price likes to attack liquidity below old lows, right? So price then draws back up to here, finds resistance at this order block, these up close candles here after the breakdown. So then we're waiting to see how price action develops. We once again get a bearish gap here, all right? then what happens here? Well, actually, price is really heavy here. It takes out liquidity from this low, first of all, leaving this swing low. Price then retraces back to our gap where we're only looking for short trades unless we close above. Ultimately, we've sold off again to the liquidity down here. Now, what we've done for the first time here that we haven't in a while since we did it in the opposite direction here is we've inverted this bearish gap, right? So that means that that's now expected to form as support. Seeing a strong close above. So where's our target? Well, we can see we've got this rebalanced bearish gap. So I'm actually not concerning myself with price rejecting here, even though this wick you can see has had a reaction. Why? Because the sellers are still in this area. But in terms of where the liquidity is resting above this higher, right? So that's where I'm looking for a reaction. I want to see price come up to that level. Yeah, like this. We want to see price get above it. Then we want to see some form of liquidity sweep locally. You want to see that breakdown, right? And then this is where we can get realigned with our higher time frame plan shown by the other arrow here. I'll do this one in red just so it stands out a little bit more. All right, and that's the kind of play that we're looking for here. We're saying, okay, can we get that kind of reaction? Can price come to a key liquidity level where we actually have the ability to do this? Now, my dear friend in the background has shared the link with you. Of course, if you're interested in any of the services, joining the Discord, you can do so for free. And also there's paid services, but come along and give it a try out. Yeah, and you get access to the B Pro as well, which I'll cover as well in a moment when we look at these kind of higher time frame kind of plays. But if you've got any questions or any interest, please don't hesitate to reach out. I'd imagine the information will be down in the description for everybody as well. But this is what we're looking for here. I actually think we get this move higher here. I think if we did reject it, it's fine. We're ultimately just setting a lower high, but it would surprise me to not see price kind of come up and take liquidity from here. We close this candle in 3 hours 36. If we leave this gap here, or a form of this gap, which is a bullish gap, this then gives us a really, really clear play, because technically on the lower time frame, so if we're using a 4 hour now, we'd be looking to execute down on, say, a 15-minute or a 5-minute. Well, we want to see this area hold and then price to push up. So an intraday play could be watching price come down to this area, looking to long it. If it shows a lot of weakness here and ultimately inverts it, violates it, then we have our next clear target below us, which is resting below this swing low at 57,128. So let's just get rid of all of this for a minute. Let's just clear this all up, right? Hopefully that's been clear to everyone. Please don't hesitate to ask questions. If you've got anything, pop them in the chat. I'll absolutely try and do that. But, ultimately, if you're interested in this kind of analysis, learning it on a deeper basis, as well as what it takes to trade, for a living, which I've been doing for sort of 7 years now, then come and join us over at the Bird Nest. Come and, engage with the trading team over there. All professional traders, got wonderful teams covering everything from algorithmic trading to fundamentals. Obviously, access to a great community as well. I'm just going to name this. Let's have a look. So we've got, let's save it as our inside bar. So now I'm going to turn this away. And now there's, something else you guys don't see from me a lot, right? Which is the use of our in-house indicator here, B Pro. Now there's a lot of different features that you can use on B Pro. And I'm a very, very simple creature. So I don't really use tons, but I'm just going to run you through kind of an idea and how you can use this, and we can move the divergence system on as well, which is something that I like to use. Let me just turn labels on here, otherwise there we go. So sometimes this can be really, really good, especially for people that look that see this as a much more kind of visual learning landscape, which I totally understand. Now, what I'm going to do is I'm just going to change this so that our high time frame trader is represented by a daily chart. And then that way, what we're going to do now is we're going to get two trailers on here. Yeah. So the daily chart, which is the larger, thicker gray line or thicker black line, and then the thinner black and gray lines, which are our 4 hour chart, right? So we're on the 4 hour. That's the current one. This is the high time frame. And really what you want them to do is you want them to be in agreement, right? So from here, for example, to be bearish. All right, and then where did we do? Broke up from here, aligned with this So just for example, from here to be bullish. Right, and there's a lot of different ways that you can use this, but ultimately what you see is these help keep you in the larger portions of the trend. And then what we can say is when we see these kind of key elements of change, like we saw this really, really big inversion here, right? So this should have been a bearish gap. We ultimately closed above it here, and then we managed to kind of sneak in some of this upside. It was the precursor to this recovery that we saw again before the kind of fallout. So now, this is telling us at the moment that we need to be cautious because from here to where we are right now, we're trading in a bearish trend, okay? What we're looking for in here as well that can add confidence is look at these divergences. Now, this is something, and I said that I'd cover this for my friend Cuba after putting out a nice title header this morning about the RSI and how we can use oversold and overbought. I'm going to add this on here, which I think is one of the ones that I didn't build it, but I had help in adapting it from a very, very kind person called Fakira on here. So, because for those of you that are using indicators, this is how we get our divergences. It's when price action, is in disagreement with, say, like our RSI or our oscillators. So what we can see here is that price set a lower high here on the RSI. We had this high, price set a lower high, compared to price up here that set a higher high. Right. So now we want to be cautious here because we can see this as being a manipulation move to the upside before price breaks down. We can see the same divergence on here as well, except this is just an old hacky RSI that we've adapted some code for, or actually Fakira adapted code for. I just adapted it for the colors to suit the white chart. So this is how we're kind of overlaying it, right? So I just want to kind of look at this with everyone for a moment. Also, these are the kind of B Pro level lines, which I've got turned off at the moment. That actually offer really amazing support and resistance, right? So, if we were looking at these, for example, what was that, 58,661. I'm not really able to draw these lines as excellently as as B Pro, right? But you can see how you get these pivot points: support, turn, resistance, back to support. Yeah, so again, it's kind of everything you want it to be in an indicator. It just depends how you want to use it to overlay for your style. And typically what I do is I have this set on to 4 hour and I just keep the high time frame trailer in place. Then when I'm looking, especially if price action is a little bit choppy or we're really struggling to get these reads, then quite simply, you can just look at these just really nice and simple, really nice and clear, and it just gives you a little bit of an indication. You can then use that with something like an RSI here and say, okay, well, from this moment here, we've been bearish, right? So if we're aligning this with this and we move this back over here, you can see, bullish divergence here down on our RSI, price rising up. Yeah, it's not quite up here, which is the midline. We can see we've got plenty of room for price to grow. So once you get back above there, it gives you that extra confidence. Then you can use your bullish gaps to target longs. Good morning, Miguel. And then the other thing that you can do is, again, using our gap inversions here. So that should have been a bullish gap, right? Price closed below it right here, confirming that we're bearish on the RSI. We're heading down into oversold, which is good. Means we've got plenty of room to move down. The B Pro trader has turned bearish, meaning that the whole time it's kept us under here. It's kept us on the right side of the trend. And then our fair value gap inversion here just gives us that extra bit of confluence. Now, obviously, the higher time frame that you move to, let me just tidy this up a little bit because I want to have a look with you all about how this looks, say, on like a weekly chart, right? So first of all, B Pro had us bearish from the 1st of July. Yes, we saw this little pump back in, but actually we can see really that it was quite accurate. Now, obviously, we've gone from higher high, higher low, lower high, lower low. This is the moment we turned into bearish market structure. And now there's every chance there's a continuation of that low there, which I've kind of put over here just so it's out of the way. Now the question is this setting a lower high, or is this going to give us some kind of shift where we shift structure, don't break it because we need to set a higher low before breaking it and ultimately regaining market structure for the bulls? Obviously, until we do that, everything on here really is telling us to be cautious, right? It's telling us to be bearish, and it has been doing so for a little while. Now, the issue here is that the RSI is kind of just hanging around midline. Yeah, so that's a little bit of a tricky read, I'm not going to lie. In terms of looking at any major news catalyst 23 minutes ago, Cardano creator doesn't think Bitcoin can survive. No real kind of, it's just fuddy news. Key week for Bitcoin and the dollar index. So again, I'm going to cover that with you as the stream goes on a little bit. You know, I use traditional markets to try and gauge the market's appetite for risk. And then with, you know, Bitcoin being a serious risk asset along with crypto and really kind of a beta risk asset, the more of a risk on sentiment we have in the market, the better the conditions should be for, for instruments like Bitcoin. So RSI at the moment is quite neutral on a weekly scale. BPRO's bearish. We're below the previous all-time high. So I think we need to be cautious. Yeah, like we said, we set a bearish engulfing candle here as well. We've swept the high from our inside bar. So at the moment, we're looking for a move down around the kind of 56, 55 level, gets down below that. And I think then we really could see a flush down here to kind of the 49 region that we discussed previously. So let's take a look at this now on a daily scale as well. What's the daily telling us? So the daily is telling us we had this little bit of a bullish resurgence here, right? What did we do? Price came down here into oversold on the RSI. Always a good place to consider, right? Never, what we would say in England, and hopefully this makes sense, but never hang your hat on it. Like with anything in trading, we're just looking for these little snippets of information, these little things that help us get an edge on the market. But ultimately, when price is down in oversold, you're looking for long setups. When it's in overbought or around and close to overbought, then you're looking for shorts, right? The tricky thing is, as we can see here, when you're in really strong trends, price can spend quite a lot of its time up in overbought, like here, dips down just a smidge here for this nice consolidation. We get our divergence, price pushes up again. But again, you would be, look at these divergences coming, you're looking to short these. However, really, these divergences more often than not, as we saw one here, let me draw a few lines for you, for anyone more interested in kind of using the RSI. I'm just going to draw them on this kind of move up here, right? So we got bearish divergence here, 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 and here, right? Now, when we look at those, what you'll notice is they're actually catching the corrective move in the ongoing trend, corrective move, ongoing trend, corrective move. What you really want to see is price start to break down. Then you're saying, okay, well, if we're starting to move a little bit lower and you see price get back underneath from being oversold, from overbought, then you can start to say, okay, maybe we're due a calling off period. But again, you want to be cautious with those things, but they do help add confidence, especially when you get these divergences. So where are we at the moment? Again, we can see price kind of just in the middle of nowhere, right? We had this little kind of tiny little hidden bullish divergence turn up here that led to this corrective move, but ultimately the corrective move led to a bearish gap, and now price is continuing its move lower, okay? So in terms of using that, it's not really the clearest read on the RSI at the moment. We are down in the lower portion. Again, we could see this head down. We start getting above the 50% mark of the EQ, which is this dotted line. I think we maybe show a little bit more strength again. For example, see this big sell-off down here? Yeah, we saw price spent the entire time here under the 50%. We got above it over here. Literally the candle after BPRO turned bullish, and we got all this lovely upside here until we got the divergence, price up here, tickling its way towards oversold, but not quite. And then we saw this breakdown. Again, we got a reaction from the lows. Now, you don't see me use the RSI a lot. I used to, in fact, trade the RSI as my key swing strategy since in the last kind of, 3 to kind of 5 years, moved a lot more heavily into intraday trading. Hey, jokers. Great to have you with us, bud. So that's where I am at the moment anyway. So I'm just going to take these all off the chart now and just, move to a really nice, clean chart. Let's have a look where that one has landed. Maybe it's further up here. There we go. Right. So what's the plan at the moment? What I now want to do is just cover off, first of all, the seasonality that we were discussing, right? So let me just switch screen for you guys so we can take a look at that. This kind of information is really super important. We share this all the time over at the Birdnest. We want to make sure the members are always fully informed. But again, have access to the right information, but also the context that goes behind it in terms of being able to make that into actionable decisions. So from our committee call this morning, hopefully you guys can see this here. All right. And what we can see here is each month that we've got across the top. So you've got January all the way through to December. And then over here, you've got the years. Down here, you've got the average, and then you've got the median, okay? So just to focus on that, and again, this gives you a really good visual representation. For August is a very mixed month, look. So the average plus 1.75%, median minus 8.04. Now, look at how these align almost perfectly here in September, right? Both very, very heavy down months. As we then move into quarter four, look at what we get in October, yeah? So, I mean, it's just, look, historically, it's been a really, really, really big month. November as well, really, really, really good months for the markets. You can see here that 2018 was the anomaly along with 2014. And up here, we had a couple, you know, that really kind of stood out here in November, but ultimately October, you know, standing out very, very clearly as the most bullish month. So let's get ourselves back to the chart. And for some reason, it doesn't want to let me share that. 1 second. Interesting. I don't know if you guys can still hear me okay. It looks like we got a little bit of a glitch. I don't know whether it's with TradingView or maybe with the streaming partner. But please do let me know in the chats if you can still hear me. I'll just try and find a solution to getting this chart shared across for you guys. Okay, but no chart, right? Let's have a look. Yeah, we hear you. Brilliant, guys. Okay, let me just see. Hey, Burn. Hey, and Whack. Just in time to see the technical issues. Wonderful. Yeah, it's still black screen. I'm not really sure why it's doing it, guys. Hang on. Let's stop that all and let's see if we can re-engage the old girl, shall we? There we go. Can't beat the old on and off again sometimes, can you? Cheers, Bruno. Okay, mate. Right. So what we're going to do now is we're going to just take a quick look at what Bruno was talking about here. All right. So I'll leave this up for a little bit, but then I am going to read it back to you guys because I appreciate some of you. This will kind of be dominating a lot of your screen. So first thing we're going to do is Bruno's asking here about AVAX. Yeah. So 3x from $19. So let's take a look at the AVAX chart. So we can see here the concern that we had with AVAX is that we're now very heavily below. Yeah, we closed below this bullish gap. This has been supporting the market. We took liquidity from here. And now the expectation is the price would kind of find this resistance around the equilibrium if it was going to draw any higher. And we can see if we just draw this in here, the price has kind of ended up doing that quite well. We've come up to this area here. We drew back up, filled this gap here. We actually inverted it. But again, that can sometimes be, you know, liquidity issues when you look here on crypto. However, you know, we don't ever want to just discount any information like that. But what we can see quite clearly is this is now a big bundle of resistance overhead. So I'm just going to get rid of that quickly and say, okay, well, where are we at the moment? Well, let's just save this as some recent data so we can turn that back on. And then what we can do is we can do this fresh starting here. All right. So now we're looking at this. I think something that had me a little bit bullish here on the weekly scale was the fact that we inverted this gap, but then we came basically back below it. So, you know, closing back below this, once that's been inverted, that then for me has not really been useful information. I think the issue with this sometimes, like I say, apart from liquidity as well, is, you know, that we're running into a rather large order block here as well that hadn't been retested. Why we're kind of looking a little bit cautiously here at AVAX, although some of the community over there, like Erica, who's in the chat today, I know is one of them, and a few others as well, had put some wonderful short plays on AVAX waiting for this kind of move. Now, where does this leave us at the moment? Well, I want to be a little bit more granular here. So I want to start with the daily more than anything. Now, the weekly is pretty clear. We've got a lot of overhead resistance. We can see this, what's looking like a pretty aggressive V-shaped rejection here. So How would I be looking to play this? Well, first thing that I want to say is, if this is a long-term hold for me, right, and I know it might not be for you here, Bruno, because, you know, especially with the kind of leverage position and bits and pieces like that to hold, then, you know, there's a little bit of a different approach there than the one that we would be taking in terms of looking at this, you know, as a swing trade, for example, right? So if I zoom back to the weekly here, well, where am I really kind of looking for? Well, quite simply, see how long ago we were using this. Let's just get rid of those for a moment. Well, quite simply, I'm saying to myself, well, if AVAX, you know, was trading up here, wasn't it? Around 150, was it? Or late 147s? Yeah. Hang on, to pop this on quickly. Yeah, 147 flat. In fact, again, a round number, right? And it's now down around $22. Well, the first thing I'm asking myself is, what's my time horizon? Yeah. Because if I'm looking short-term horizon for potential short-term gains, then that's very different if I'm looking to hold this for a much longer period of time. Now, we never know exactly what that period of time is going to be. But for me, as long as I can get information that tells me that AVAX is still fundamentally sound, that the team are still very active, this obviously has a lot of upside potential. The issue that I would have getting rid of this now, and I think you said that you were longed AVAX 3X from $19. Yeah, I think that's a good buy. You know, you were basically buying on this dip, I would imagine, right? I know it's very, very close to your entry price now. So what I would say is this, because it's impossible to know your position in terms of, you know, in terms of a lot of factors, right? Your risk profile, your timeline, etc. Personally, I would look at this from an element of risk. And I would say, if you're not comfortable with this heading down here, you know, because really, if we do start to break down here, then the cleanest liquidity, I would say, we're looking at this gap here down at around about 15 all the way down to kind of 12, and potentially these equal lows down around sort of 8.5, about 8.5, 8.7. I'm not saying that that's where we're going, but for me, with my holdings, I would be looking at this and saying, well, I'm not really looking to sell here, but I'm definitely looking to buy down here if we get that opportunity, right? However, if you're not happy with the position, I would say then there's a reason for that. So you've got one of two options, really. One, you can wait for price to establish itself above here, in my opinion. I think, you know, this is the key high that's in play. This is the high that swept the low, right? So if we get a reaction here, remembering our kind of pattern that we're looking for, as we discussed earlier, that's the low. So we've swept a low. This is the high that led to the sweep of the low. Price established itself back above here. That's one of the safer places to be a buyer, taking some profits on the way up, okay? And then obviously higher time frame targets as we zoom out. However, if you're not comfortable in here, then I would say, while you still have minimal profit and we're back below this gap, then, you know, you can close your position out. If anything's really making you uncomfortable, if you're overexposed to it, fine. If not, I would be personally using dry powder to kind of focus on these areas down here to buy more. And your real risk then comes in if this just goes to zero, right? So then you need to weigh up, okay, what's the looking on that? Find yourself some really good fundamental analysis. We work with Chris, crypto assessor over at the Bird Nest. He's really, really good, insightful guy, lots and lots of really kind of deep, detailed reporting and stuff like that. We obviously used to work with Crypto Penguin Dave, who is just a complete legend in the space as well. But there's other really, really good people out there, Kazi, and, you know, a lot of other good people that you can go to as well. But, you know, maybe come and join, take advantage of the free trial, come and, you know, hit Chris up and really make him work for that, those kind of fundamental pointers, because as long as that is in there, then really these conditions are good for setting ourselves up for looking forward into Q4 and then Q1 next year, right? That's when I think, you know, we've got the election year, we've got everything else, you know, we've got these catalysts, we're going through what is historically and seasonality wise, as we looked before, a very bad month in September. So while a lot of people would kind of look to panic sell those moments, for me, and I think, you know, I think for other accounts as well, I've seen people vocal about it on Twitter, etc., and I agree with them. I think these are the times that you're looking for these kind of, you know, that you're looking for these buying opportunities. However, I would always suggest or always recommend, if you're uncomfortable in a position for any reason, to clear the decks of your position, right? While you're sitting a little bit of profit here, you know, look, ultimately on a daily scale here, this thing's still holding quite bullish, because you can come and set this low, right? So come down here, big sell-off. Yeah, then we've set this higher, higher low, higher high. This could just be a higher low before price moves up. But how comfortable are you with that buy? Because what I would say is, realistically, let's say that's our line in the sand down there. Yeah, that low there's probably roughly in and around where you bought, maybe a little bit lower. Yeah. So there's two trains of thought here. One, price comes and sweeps this liquidity and then makes a big move, because also I'm always asking myself where the damage is. And I think this is a good move from price action, because if I was looking to trap people and generate liquidity, I'd want to shift market structure to the offside before recovering it. And that low is going to be that kind of point. So I think you either want to be in and around here, ready here or here, with some buy orders if you do clear the decks here, or, price could ultimately kind of have a bit of a rip from here. What I would be looking for in terms of confirmation would be this gap, currently a bearish gap, to be closed above. And I think then the likelihood is fine. I think we head here and then we head to these equal highs up here, which are around about 32. So that's certainly how I'd be looking at that. If you want a bit more granularity on that, then quite simply, we've got a lot of intraday liquidity targets resting up here. We can see the gap that is capping the market here at the moment. Yeah, the gap was created, resistance, resistance, price has sold off. Where is price reacting from? One of my favorite places, which is this low. It's a low that is within a gap. All right, so we can see the nice bullish gap here. We can see the low. Price respected both. So now, quite simply for me, on an intraday basis, then as long as this holds, I think we're going to draw up towards some more resting liquidity up here. And I think intraday-wise, this is kind of that. I know you're probably not looking at this intraday, by the way, Bruno, but just so that if you want a really granular level of attack to get into this, depending on your kind of risk profile, remember, now we've zoomed in a little bit, you're kind of comfortable still below this level, yeah? There's an argument if you are in and around 19, right, you're comfortable till kind of down here, really. So if you start closing down below this, chances are we're going to sweep a bit lower. You can either choose to hold that position, scale back out of it. If this area then gets reclaimed, then you can start to say, okay, maybe this was the purge. I'll get back in here. There's nothing wrong with getting back in higher up, especially if you've already booked a little bit of profit. Just kind of moving this in here, just want to kind of look in terms of a good support resistance level as well that I think we're coming back into here, because we kind of look around about here. Yeah, look, support, resistance, broke above, deviation, big sell up here, support here, price sells off, resistance here, resistance, deviation, price gets back underneath here, sells off aggressively. Look what a key kind of pivot point this has been in the market. Now, the reason that I picked this area, because you're probably thinking that just looks like garbage there, is quite simply that you just see this clean support to resistance flip, yeah? So we come into here and find resistance. We then have a nice strong move above, and then we find support. So you're looking for this, like, let me just do that in a different color so that stands out more. Looking for this kind of zigzag pattern, yeah? Price comes up, finds resistance, gets rid of resistance, finds support, and then sells up. So then when you find that, you can then look back historically and say, okay, you can see that this is obviously a key level, deviation, sell-off, underside, retest, rejection. We covered the action that's further back as well. Now we can see the price is back at that level. And what does it do? It lines up really beautifully with that. Look, resistance, support, price got underneath, resistance, 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 support. Yeah, we see these beautiful SR flips. In fact, absolutely in love with this level of 21.48. That will become a fixture of this for sure. So now I'm just kind of saying, okay, well, what do we do with that information? Well, we can see that it's given us a lot of confluence. So for me, if we close back underneath this gap, yeah, then I'm thinking that the most obvious levels to come to are here, but especially here, yeah, which is 19.77. And then we can look for buy orders around here if we get these kind of setups. One of the cleanest ways to do that is to look for your market structure breaks or shifts, yeah, like this. So you're waiting for price to establish itself. This is a really good point to then be a buyer. Or you want to wait at a key level. Yeah, you want to see price reclaim that key level, take a sweep of liquidity, and then move higher, in which case then when you establish yourself above here, that's also a good place to be a buyer. Never works out 100% of the time. Nothing in trading does, but it allows us some higher probability plays as we start to see the buyers and sellers step into the market. So now what we're going to do is we're going to overlay that same thinking here on PYTH as well. Let me just take a scroll down for a second, see if we've got any questions. Let's have a look. Chart vanished 30 seconds ago. Sounds good. Always brilliant, brilliant, brilliant. All back. Okay, Zach. Last chance to buy now, in my opinion. Yeah, I think it's a good buy level. I can't argue with that. I don't know. I don't think anybody knows if we're really going up from here or not. I think there's some other factors to kind of look at. But I do agree. I think, look, as we just covered on here, right, we're reacting at bullish gaps. We're holding bullish support and resistance levels. Look, in my opinion, it's not the time to sell, but that's me. All right, that's me, and I'm willing to wear that risk. It's certainly not something that I ever advise other people to do or not. But from a technical standpoint, this is telling me that it's had a really, really big sell-off. The time to sell is higher up, when you start inverting things like this, you start breaking down below these key levels. Ultimately, I'd be happy to just have a look here. But again, that's me. I do me. You guys do you. Always happy to share my ideas, though, for sure. And as Zach has with us, I think it does represent a decent buying opportunity. Now, Bern, if Bitcoin does go lower the next 4 weeks, alts go down as well, some more than others. I'll be expecting Bitcoin to wick down between 45, 43K. Okay, yeah, I can absolutely see that, Bern, in terms of the key levels we were looking at earlier. And Uluwezi Malogo, we will definitely make a bit of time at the end to squeeze in AAVE for you. But we're just going to cover PYTH first for our friend. Let's have a look. So let's see what we've got here. We've got a nice clean chart on this. We must have covered this one previously on a different ticker, but that's fine. Yeah, pretty clean here, right? In terms of this is capping, continues to cap the market on a weekly scale. This is our bearish gap. Price, again, look, remember, this is what we look for. Price taking liquidity from a low. Remember, if we're thinking of this in the simplest of terms, price is in this constant flux looking for lows, highs, and gaps. Yeah, as long as these bearish gaps continue to suppress price action, right, then our theory is that price is still bearish. And actually, this is a super clean chart here, as we can see. Ultimately, we didn't have any bullish gaps on this side, but what we did do is we set this bearish order block here. And this is how we ascertain order flow, right? At the moment, we're just respecting these bullish gaps. So that's fine. Now, what does that mean? Well, for me, it means that I've immediately got some targets, which is good. And that downside target here is resting at 0.22 flat. If we get back above this here, right, then obviously we need to be cautious because we do have a swing high over here, right, which is at 0.3364. Let me just take a look at exactly where Bruno was here. So PYTH 3x from 24, 0.24. Oh, okay. So again, so you're still, you're still in decent shape here. Price has had a little bit of a recovery here, right down from the lows, right? So again, if we now move this lower, ultimately what we want to be careful of here is that price has, and let me just check that. Yeah, that's an up close candle there as well. Price has just done this, right? So we have set this order block here, a bearish order block, up close candles, price closing below. So, we want to watch this area with keen interest. On a daily scale, asking myself, what's the most recent thing that price has done? Well, price has taken out this low, which we can see is capping the market perfectly to the downside. Bodies came back above here, telling me there's at least some buying pressure here. However, it could just be the case that price is coming up to retest this order block here. So I'd be looking for reactions here at 0.2733. The 4 hour, just for a little bit more context, I'd like to see this 4 hour close and leave us a gap here. The rest of the price action is pretty balanced at the moment, but early indications of this recovery could come in this form. We've swept key liquidity here. We've swept liquidity below those lows. Now, if we close in 3 hours and 4 minutes and this creates a bullish gap, then I would be looking for price to draw down into this and then move up here. All right. However, if price was to violate this, right, so this candle comes down and closes below here, then my immediate target is back down here, which is set at 0.2513. And again, still be in a position where it would allow you to exit in a little bit of profit there, Bruno, as well, if you wanted to be more risk averse with this. However, again, for me, if this was a long-term hold, then I'm looking at these levels to kind of add to my position, and I'm just kind of locking it away and forgetting about it. All right. So we're just going to close up today on AAVE. Let's have a look. So we're just going to close up today on AAVE. Let's have a look. So we're just going to close up today on AAVE. Let's have a look. So we're just going to close up today on AAVE. Let's have a look. So we're just going to close up today on AAVE. Let's have a look. So we're just going to close up today on AAVE. Let's have a look. So we're just going to close up today on AAVE. Let's have a look. So we're just going to close up today on AAVE. Let's have a look. So we're just going to close up today on AAVE. Let's have a look. So we're just going to close up today on AAVE. Let's have a look. So we're just going to close up today on AAVE. Let's have a look. So we're just going to close up today on AAVE. Let's have a look. So we're just going to close up today on AAVE. Let's have a look. So we're just going to close up today on AAVE. Let's have a look. So we're just going to close up today on AAVE. Let's have a look. Let's see what we've got going on with our friend AAVE, shall we? Must have been looking this one over with Raz if I've got a volume profile on here. Still very cool though. Right, so I think this is a very interesting situation here as well. Let me just hide that for a second. I assume that's something that we've looked at on the higher time frame. We're going to do the same with this, but we'll bring this all back into play in a second. So again, what's really interesting here is we've taken out this mother bar high, right? I won't draw in the whole mother bar pattern again. If you do want to take a look at that, please do go over onto my Twitter account. It's pinned at the top, teaching you how you can trade or certainly understand the inside bar pattern. Strange because it's called the inside bar pattern, yet the larger candle is called the mother bar. It's the secondary candle we call the inside bar. But again, you can find all the information on that on the Twitter account. So we've run range high, basically. If we look at this as a range as well, we take it high to low, then we're looking to trade, if I click the right thing, we're looking to trade this from the high to the low. So there to there. This becomes our midline. So actually this is sat down at 101.95. We've not had any change in kind of delivery here. Price is still like nice and bullish here on a weekly scale. I think we have a slither of a gap here as well. We do. Ought to be one of the smallest gaps I've seen, but it still means that there was a lot of bullish, a lot of buying pressure coming up into here to lead this gap. So I think this price could come down into this and then move higher. Ultimately, on a weekly scale, what we have now is a brilliant line in the sand. Close below this, I think we're definitely moving to this midline and lower. Hold above this, and maybe we do kind of move on here. But this at the moment is very much looking like a deviation. But, you know, compared to some of the others, this is looking relatively strong. Now, on a daily scale, this bearish gap here continues to kind of hold price action below. So that's what's capping the market to the upside. So that's kind of pushing us down here. Price has recently taken this kind of internal low. So we could be seeing price kind of move back to here. Again, on a daily basis, if we close in and around where we are, we have another gap here to monitor in here on the lower time frames for price to push lower. Should we close above this here, I wouldn't worry as much about that one, although I would look for it to be closed above. When this one, let's say, for example, actually put that back on for a minute. Let's say, for example, we do this and we get a bullish close above here, then I'm looking to trade it to this higher. And we can see again the mother bar high, really well aligned. Look at that deviation, underside retest, just almost to the cent. Because then I would want to see this inverted. So I would intraday this from here to here, close above here, and then I think we make a move for this higher here. That is sat at 148.77. So actually on a daily scale, we've got a good plan of action here. However, obviously we still need to respect the fact that price is reacting from liquidity below this low. Would have preferred us to sweep this low as well, which is at 117.15, because again, it's a low here, it's sat within this gap and a higher time frame gap. I think that's a key liquidity pool. So for me, looking at this technically from a 1 hour, a move like this would make a lot of sense. And then from here, we would have to reassess. So not 1 hour, a daily. Now looking at this on the 4 hour, quite simply, we can see the rejection that we've got from this gap. Again, it's a very skinny gap, but look what price tried to do, yeah? Remember, the wicks are where price tried to get to. The bodies are where they succeeded. So when we wicked up here, price got shoved back down below this gap, showing us that that's still quite key resistance here. So if anybody's interested for intraday plays, you know, this is what I'd be looking at the moment. We've had our kind of New York, we've had the open or the pre-market open as well over in New York, which is important. We have, you know, confirm this order block here. So I think while we are held below this, then bullet bearish plays are pretty much the order of the day. However, we also want to respect the fact that we're delivering from a large bullish gap here as well. So the safer plays would come in closing below this and moving lower. But I do think that while the momentum of the market is in here and we've closed below that, if we get back above this, yeah, and remember we would want to see this down close candle here closed above. So if this is just the offside sweep and price closes above here, then I think we're in a move to come up and start testing into this larger, higher time frame bearish gap above us as well. Okay. So look, we're going to put a pin in it there, guys. We've done that. We've rolled that for about an hour now. I hope it's been useful for you. Please do like, comment, get in touch, what you think about the show. Always keen to hear your feedback. Remember, if you want to come over and join us over at the Bird Nest, then please do find the link down there in the description. And also, you can find it a bit further back here in the chat. Share your ideas with us. Come and join a really great community. And obviously, I'll be back live again on Wednesday for you. We'll take a look at how some of this analysis has played out and get our plans ready for the week ahead. But if you're like Bruno and you're thinking, okay, what do I do with these longer term positions? The first question you want to ask yourself is, what is your risk profile? What are you willing to lose? Are you overexposed to it? If at any point you're doing anything that is, endangering your financial security, that of your family, your lifestyle, everything, then look, I'm not saying go and bleed and give these things back to the market at a loss, but make sure you're looking after yourself first. Remember, there's always another day. We all get in this habit of thinking like, we've missed the bull run. We had all that upside action. We got to it late. Now everything's turned. Make sure you're prepared so that when it does kick back in, make sure you understand seasonality. Make sure you understand where the major players are positioning themselves. And as well as that, make sure that you understand things like the news. Yes, sorry to get preachy on you. You don't have to obviously do any of these things. You can do you, and I'll continue to do me. But I would say that, looking at the red folder news we have coming up this week with a focus on the US markets, where are we? Tomorrow, we've got US ISM manufacturing PMI. Okay. We then move in Wednesday. We've got JOLTS, the job openings, right? These are red folder news for a reason. They're high impact news releases. This can affect the market and will certainly affect the market's, interest and appetite for risk. Yeah. Thursday's a really big day with unemployment claims. We've got non-farm, we've got ADP non-farm employment change as well, and ISM services PMI, finishing off on non-farm employment changes and unemployment rate again on Friday. If you take a look back over the previous week's news, as we had 2 weeks ago, I think we had the retail figures come in a lot higher than expected, and unemployment was lower, which just gave this huge bullish catalyst for indices. And therefore, you often get your beta risk assets like cryptocurrency that will jump on the back of that, and people are willing to expose themselves to more risk investments. Okay, so do take a look at that. Keep an eye on it. You can find it all for free on sites like Baby Pips, or like I use here with Forex Factory, who I think are really good. Just change the settings so that you're only seeing red folder news, and I personally focus on the US markets unless I'm trading Forex. So wishing you all a fantastic week ahead. Look forward to seeing most of you around the nest soon, and I'll be back with you all on Wednesday for our live show when we'll take a look with a focus on altcoins. Have a great week ahead, everyone.